What a strong day in the stock market today. The S&P 500 closed at record highs with the S&P 500 crossing that key technical barrier of 5,300. This is huge news, and this is because the April CPI inflation reading came in cooler from last month and came in at expectations, and the month over month was lower than expectations. This was enough for the market to rally, putting Fed rate cut hopes back on the table for this year and possibly even September, and increasing the probability of even perhaps a July rate cut. I still think most likely September now based on this recent data, but this is huge news. And BMO's Brian Belsky upped his S&P 500 price target for the end of the year to 5,600. And based on this news and encouraging news on inflation, I kind of agree with him. Look, I was kind of saying that I think the market would be trading around the 54 to 5,600 level by year end all along. I'm not going to revise up my forecast. I think probably most likely about 5,400. But I think there's a decent probability for that to happen if we see continued disinflationary trends. Look, inflation's obviously still high, but owner's equivalent rent being up 5.8%. And shelter inflation being up 5.5% is still weighing on inflation, and that's lagged numbers. The real-time data on owner's equivalent rent and numbers from apartment list and so on are a lot lower in real time. So this is lag data. So the reality is inflation might even be lower for those categories. Look, obviously inflation's still high. Even if we're seeing disinflation, that all that means is that the rate of increase is going down, but that doesn't mean prices are going lower. Prices are a lot higher than they were 4 years ago. But I also want to touch on there's new Chinese tariffs from the Biden administration for aluminum, solar chips, and electric vehicles. Electric vehicle tax is going from 25% to 100%. Semiconductors is 50%, and then steel and aluminum is, I believe, 25%. This is really because I think there's some jockeying ahead of the election. Biden and Trump are trying to outdo each other in terms of being tough on China. China kind of took advantage of the U.S. for a while in terms of flooding cheap goods into our market. I'm not sure how this policy will take effect. I'm a little worried that it might increase prices for consumers and businesses at a time when we're worried about inflation. Yes, it will ultimately promote and we want to foster more American manufacturing, but I'm worried it might increase prices at a wrong time when inflation's still kind of too high. And I'm also worried that it might escalate tensions with China. Obviously, we have to see. We have to see how China responds and what steps they're going to take. If they're going to do tit for tat or raise taxes and tariffs on other products. And unfortunately, this might also even slow down clean energy policy from the U.S. because we get some components from China. So if we have to pay higher taxes and tariffs, and we're doing possible trade war, that might actually slow down climate policy in the U.S. But at the same time, this is jockeying ahead of an election, and it might also help. But it might also hurt climate policy. Let's stay tuned for more information as it comes out.